Hey guys, how's it going? I got another state of the market video. But first, if you appreciate what I'm doing, hit that like and subscribe button and check me out on Twitter at WTrades. It's DUBYA Trades. I also have a Patreon that's at Zero Plays Trades. Check me out over there if you're interested in getting more out of the community. Now, that being said, let's get into it. So first, we're looking at the SPY here, the 4-hour chart. Now, guys, we had already hit our resistance level at about 416, which we was expecting it to be between 416 and about 420. And we have pulled back, but one of the reasons why we're kind of stuck in this level is the CPI data coming out tomorrow, PPI after that, and the way earnings has been going here recently, which we'll get into all that right here in just a minute. First, let's do kind of a breakdown of the chart. So we have hit this resistance level, which has been strong resistance before in the past, not just here, but even further back. And we're currently trading within this zone, bouncing off the 20, which currently we're sitting at just right under the 15-day moving average. We haven't quite pulled back to that 407 area, which I know Max Payne has been at that level a few times, but we're so put heavy in the market right now with so much expectation of the market going down that Max Payne for tomorrow, which as we know on the SPY we have 3 0 DTEs a week, but Max Payne for tomorrow is sitting at 412 because we have so many puts in the market. We're so put heavy. So normally just on the chart itself, without, within a bubble, if there wasn't the CPI data, I would expect this to at least pull back to the 50-day moving average, if not a fib level or something along that line. But one of the things that we've been seeing here lately is we've had kind of like a super earnings week the last 2 to 3 weeks. And a lot of the big guys has already posted earnings, right? So let me show you a little bit of data right here. So this is the earnings beat data, and it shows you how many beats to misses they are and what that percentage is. Now, you've seen me use this before in the past, and I like this to be above 73 if the overall market is going to be bullish. 70 is okay, but I really like it at 73 or higher. As you can see here, we are well below that, almost 10% below that at 64. And a lot of the really big names like Apple, Google, Amazon, they've already posted their earnings. So this is not very good. We do have some kind of big names coming up in that mid to large cap area, but is that going to be enough to really turn things around? I don't quite think so. I mean, we'd have to have almost every one of them post really good earnings and move up. So that is one reason why the market's kind of bearish, but as we've seen here recently, almost every dip is getting bought back up. And this is where the so-called quote-unquote dumb money is coming in. They are late to the game and they're kind of FOMOing in, rushing into it all in expectation. Smart money is doing one of two things. Either they're anticipating what the data says that we'll possibly get better than the last CPI and go bullish, while some are bearish and are starting to short the market. That's one of the reasons why we're seeing shorts pick up and the puts being a lot more heavier in the market right now. So what do we need the CPI to be in order for this to be bullish? And what does it need to be at if it's going to pull on back? And what is it going to be at if we expect a major pullback? Those are some good questions, and just doing some quick Googling here, we can see that here on Yahoo Finance that the expected, let me find it right here, the expected CPI, now if you remember correctly, let me find it right here, the last CPI was at 9.1. I can't remember what the core was. I should have already had it pulled up, but I can't remember. But the CPI is at 9.1. So we would expect it to need to be better than that if it's going to be bullish. But if it meets that or goes past that, then we're going to be bearish. But the market is so confident that they've actually expecting the CPI to come in at 8.7. Now, what I'm expecting is if it comes in at 8.7 or better, we're going to be bullish. Anything between 8.7 and 9% or 9.1%, I expect a pullback, but I don't think we're going to tank. I think we're going to pull back to a reasonable number, and then probably it's going to get bought back up and go forward again, as long as this earnings really doesn't crush us, right? So, with that being said, I guess it ain't a real stretch to know that if it comes in at 9.1 or higher, that's where our tank level's at, right? Because for one, it's completely unexpected. Two, it shows that inflation is getting worse, not better. Or at the very least, it's not pulling back as much as they thought it would. And we know from Mester that Fed Mester that he's already saying that inflation is in, recession is in, things are not getting better. While several of the other Fed members have even went as far as to say that dreaded T word, transitory again, right? They're actually using that term again, guys, and they're actually saying, no, there's nothing to worry here. It's like driving by a wreck, seeing your own family members outside the car and all mangled up, and the cops just being like, no, there ain't nothing to see here. This is just a circus with bunny rabbits behind me. No, man, we know that things is not good in the market. The question is how bad are they? Are we starting to get control of it? Possibly, but I doubt it. If so, how much control are we getting of it? We got to remember that with this earnings beat data, this 64%, most of this is with the lowered expectation. So we're not even meeting the lower expectation on this. And we also have to remember with oil, I keep hearing oil is pulling back, oil is pulling back. No, it isn't. It's just off from the highs, and it's leveling off. We are not back down to the bottom yet. If we pull up US oil, go to the daily chart, we can even see that. I mean, we're still at around $90 a barrel. We're still up really high. And we're still not back to around, even if we go to the highs around October, that's at 85. We're almost there, but not quite. But we can see that through most of the year, it's that lower 70 area, if not lower, is where this really needs to be pulled back to if we want to be good. So with all that being said, what do you guys expect it to be? I'd like to hear you sound off in the comments. Are you bearish on all this data and information? Or do you think, nah man, I'm good, we going up? We do got to keep in mind that if we do pull back, I'm looking for us to pull back. Like if it's worse than just a point or two, we're probably pulling back to this 390 area at the least. And that's not taking earnings into account. That's just CPI data. But if we are bullish, I could see us easily going past that 420, 430, possibly even back up to the 450 area. Because the market is looking for about any reason to be bullish. We are currently trading above the 200, which we haven't done for a little bit now. I mean, March was the last time we traded above it. So, people are tired. We've had our pullback. They're wanting to believe that the bottom is in. So any good news is going to send us more rallying. So again, I ask this question to you guys. Do you think we're pulling back to the 390 or even further down? Or are we going up to that 335 area or possibly higher? Right? I had originally said I thought the market was going to pull back to 340. And if they don't end up taking this more seriously and getting control of it, that's probably where we're heading. We have to remember that we're also in a midterm year. So they're wanting to put this better spin on it. They're wanting to try to get control of it without it really tanking, and I just don't know if that's possible. But overall, we are holding trend. Analysts are expecting it to be better than the 9.1, as we said. What was it? 8.7. So with all that being said, there is reason to hope. But is hope enough? Is it going to get us there? Is it going to get us over the finish line? Is the earnings data, even though that we're on lower expectation and still missing, is this just going to be a bad quarter? Or is this a sign of things to come? I post that question to you guys. I hope this video helps. Like always, if you have any questions, please message me here at Twitter, or check us out at the Trading Collective Discord, where every day from before bell to after bell, we have live trading sessions where we all get together. You can jump in the conversation if you want to. If you don't have a mic, we have a chat for that live stream that you can jump into. But the link is in the description down below. If you guys would love to join us, we would love to have you. Come, learn, share, and check us out. So guys, again, if you appreciate what I do, hit that like and subscribe button. Watch your levels on the chart. I'll try to post new levels for CPI tomorrow in the Trading Collective, and I'll try to tweet that out too. If you have the Selene Algo, which again is in the description down below, you can cut and paste those in there, and it'll automatically put those levels for you. So guys, you have a great day. Keep eye on the market tomorrow. React, don't predict. Stay with the trend. Good luck. Bye.